I don't think the Fed's going to stand by and continue to tighten if the stock market falls by 20%. And they would likely reverse course on their taper and any talk of raising interest rates in 2022. And, that would just be rocket fuel for the metals. I think that's when we see the big move, when the Fed reverses course.
This week's specials with Miles Franklin Precious Metal Investments.
2021 Austrian Philharmonics for only $360 over spot. 2022 Noah's Ark silver coins. 1 ounce coins for $375 over spot and 1/4 ounce coins for $245 over melt.
Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Steve Penny from the Silver Chartist. Steve, thank you so much for joining us today.
You bet, Elijah. Thank you for inviting me back. I'm not in my home office here in a hotel, but looking forward to talking today after the Fed meeting yesterday. We're seeing some nice moves this morning.
Definitely. It's very counterintuitive because we heard essentially the Fed is going to plan to double taper, so speed up the amount that they're tapering. I was just talking to Mario Ineko from Ineko64 YouTube channel yesterday, and he was saying how this is really not actually hawkish, because if you look at what the Fed is actually doing, they're still promising more stimulus and they're not raising rates at the moment. So your perspective on what the Fed did and how the markets reacted, because the markets did rally actually across the board, the stock market and precious metals. And we see that they are continuing to rally this morning.
Yeah, for sure. I think I was on your show late summer when the Fed announced their initial plans to actually taper. And, most of the consensus amongst people in our community was, they're never going to taper. They can't do that. And I kind of took a different take. I thought they might actually try it. And sure enough, they are. They're doing it. But I also said, it's often, the threat of tightening monetary policy that puts the most weight on the metals. But when they actually do it, that can often mark major lows. And if you go back to like December of 2015, that was the first rate hike in a long time, in I think 7 years. And that literally marked the low to within a couple of days and preceded a major rally. So could we be seeing something similar here? Possibly. So I think it's more of like a sell the rumor, buy the news kind of thing.
And we do see, as we speak this morning at about 12 p.m. Eastern time, we do see gold touching that 1800 level, silver around 2250. Are there any key levels that you think we're breaking at the moment?
Yeah, there's some key levels, but what's really got my attention here in both silver and gold is the candlesticks that are taking form on the weekly and the monthly chart. And often when you undercut a major support level, like we just did last week in silver, and then you close back above that's a very bullish technical signal. And that catches the attention of institutional traders who trade off of technicals and these algorithms. They see an undercut of a major low and then it closes back above. That's often a buy signal for them. So I do anticipate this rally has probably got some more legs to it. Now, is it the exact bottom? Time will tell. But I think there's a good chance that last week's low or yesterday's low of 2140 was probably going to provide a significant support level from here on out. Could we come back and backtest it? Possibly, but I think the chances that the lows are in are very good.
Definitely. It seems like that's kind of a double low because I know late September we saw those levels as well in silver.
Exactly. We undercut it by a few pennies this week and closed back above it. So yeah, very bullish sign.
And why in particular is that a bullish sign? Is it bullish because it didn't break below that level?
Yeah, they call it a fake out move. So it's bullish because buyers stepped in. We overwhelmed the sellers. They couldn't keep it below that important support level. Once that support level fell, a lot of short sellers come in, and then the buyers come in and overwhelm them. And, it's like a failed breakdown attempt, you might call it.
Why the markets reacted this way, you're thinking is kind of because all this taper talk was already priced in. The markets already knew what was going to happen. And when the Fed actually did it, they're like, well, okay, they're not going to react to it because they already had weeks before. Is that your take?
That's exactly right. Yeah, I meant to say that before and I got on a bit of a tangent. Yeah, I believe the worst case was already priced in. So this is a relief rally. The market had expected this and it wasn't worse than they had anticipated.
And looking at what the Fed may do in the future, they said that they may raise rates about 3 times next year. Do you still see that bullish for gold? Because normally when rates rise, that's bearish for gold and silver.
That's kind of the consensus, but it's actually not necessarily true. If you go back, and December 2015 is the first example. They did raise rates a few times, and the metals continued to rally. And what matters is not nominal rates. What matters is real rates. And as long as inflation is running hotter than nominal rates, that's still negative real rates, and that's rocket fuel for gold. So I don't see that as a threat. And then can they continue to raise rates and actually normalize them? No, I don't believe that's possible. I don't believe that's mathematically possible, because historically a normal average interest rate over the past several decades would be around 5-6%. And our national debt is $30 trillion. We're approaching $30 trillion. So a 5% interest rate on $30 trillion would be $1.5 trillion a year in interest expenses. That just can't happen. The math doesn't work. There's not enough tax revenue to cover that. And I read a statistic that last year, the Fed bought 55% of treasuries that were issued. Well, if they're going to scale back their taper, who's going to buy this debt? Obviously, for anyone to even consider it, the rates are going to have to rise. And that's just untenable with our debt situation. It's not like in 1980 where they can raise rates, because it would consume all of the federal tax receipts. So that's the situation we're in. There's no solution. So I don't think they can continue to raise rates, but they might try it a few times.
In addition to putting a financial burden on the U.S. with all of its debt, raising rates, others have also argued that would just crash the stock market if the Fed was to aggressively raise rates.
Yeah, and I'm glad you said that, because that's kind of my baseline scenario. And David Brady, who writes for our letter, thinks something similar, where they may try and tighten a little bit, but that's probably going to weigh heavily on stocks. And I try and avoid terms like crash, but let's just say a 20% pullback in general equities. I don't think the Fed's going to stand by and continue to tighten if the stock market falls by 20%. And they would likely reverse course on their taper and any talk of raising interest rates in 2022. And, that would just be rocket fuel for the metals. I think that's when we see the big move. When the Fed reverses course, I think that's when you start to see, $2,300, $2,400 gold, and we move towards $50 silver, and that's possible in 2022.
And it seems like, and I'm hearing this from a lot of people, that, even though the Fed is attempting to curb inflation, it's not going to happen. We're going to see inflation for quite some time going forward.
I feel like there's this debate between inflationists and deflationists. And, often two intelligent analysts can be both correct, just in different time frames. So I think almost all the people in our community, even the people who highlight the deflationary risk, would agree that the overall trend is towards, much bigger inflation. However, we're going to see deflationary impulses along the way. And, that, from my perspective, that creates opportunities for people with cash to buy metals and mining stocks on sale.
Definitely. And then your outlook for this next year with respect to gold, silver, and mining stocks.
I think we grind higher in the first quarter of 2022, first half of 2022. But I think the big moves come when the Fed reverses course. I think that's inevitable. It's just a matter of when. And that could be in the back half of 2022. But of course, whenever you give a projection, no one's perfect. So I don't want to be like, hey, this is my exact forecast and this is my prediction, exactly what's going to happen. But that's my baseline scenario. As we start to move higher, first half of 2022, eventually the Fed reverses course. And that's when we see, the move towards $50 silver, $2,500 gold that we've all been waiting for.
Now, you've also talked about platinum, and at around less than $950 at the moment, I believe. It seems like a fire sale to many people. And I guess, what is your perspective on platinum at the moment? So
I love to find just beaten down, out of favor commodities or sectors that no one's talking about. And not that nobody's talking about platinum. I know David Morgan, a lot of really smart people are talking about it. But what's really caught my attention is not so much the price, but the ratio chart and how undervalued it is relative to almost everything else, including gold and silver, surprisingly silver even. And it's just hated. In 2015, they had that Dieselgate scandal. And I think the market's overreacted to that. The world's going to square off diesel engines and catalytic converters, and that's going to hit platinum demand. And there's truth to that. But I think that has been already overpriced in. And then the potential bullish catalyst, no one's looking at, or not many people are talking about. And that's substitution for palladium. We're seeing early signs of that, where car manufacturers substitute platinum for palladium because it's cheaper. Also, hydrogen fuel cell technology and hydrogen energy uses a tremendous amount of platinum. And, I think that's going to get a lot of traction going forward. So there's a lot of catalysts, and also investor demand. Other people are going to notice just how undervalued it is. And it doesn't take a lot of big money piling into platinum to really affect the price because it's such a small market. It's roughly 30 times more rare than gold.
It's very obvious to people if you look at the prices of gold versus platinum, how you could say platinum is undervalued with respect to gold, because typically it's higher than gold's price. Right now, it's about half of gold's price, right? Now, you're saying that it's actually undervalued with respect to silver. What is your case on that?
Yeah, that's pretty surprising. And by no means am I saying, hey, platinum is a better risk reward play, because I think we're headed into a currency crisis and silver and gold are monetary metals. However, there's a place in my portfolio for a small percentage of platinum. I want exposure to it just based on the ratio alone. If you go back to, I think it was the 2008 peak in that ratio, that would mean platinum outperformed silver by a factor of 5. That was pretty stunning to me when I discovered that. And, part of my personal strategy is to accumulate some physical platinum now. And then if I can later, I'd like to swap it for gold as that ratio normalizes.
And if we look also kind of at that platinum play, your perspective on maybe the best way to play platinum, would it be the physical metal or more of the platinum mining stocks?
That's a challenge with platinum, is finding quality mining stocks. I can count on one hand the number of stocks that are even worth looking at, in my opinion. So I build my platinum portfolio around physical metal. And what's unique also about platinum is roughly 70% of the production comes from unstable jurisdictions, mainly in South Africa. And so the production is at risk. There are some new mines in North America that should come online in the next years, but right now, 70% of the production is coming out of South Africa, and that's not a very stable jurisdiction, which just bodes well for the supply-demand fundamentals.
Definitely, and I think when it comes to investing in the physical metal, there's different ways of doing that. You can buy the ETFs or you can buy the actual metal. I know here at Miles Franklin, we have the Valcambi bars, which are probably the lowest premium, and it's kind of cool because they have a serial number on each bar, and they're carded and all that, and they look really nice. But your perspective on your favorite way to invest in platinum?
Yep, physical metal. I call a place like Miles Franklin, like you guys have. I've got some other dealers I use, but yeah, physical metal is my favorite way. There are some ETFs. A lot of people talk about the PPLT ETF. The custodian of that metal is JP Morgan. I just don't like anything to do with them, and you're paying a fee. I think it's like a 0.6% fee per year. So I just prefer the metal if you want exposure to the price as opposed to PPLT.
Now, I know one market that also has an impact. It's good to look at because it kind of has an impact on precious metals as well, is the US dollar. Your perspective on the US dollar recently?
Yeah, we broke out above a key resistance level, rallied up to about 96.80, if I remember right, got overbought, technically stretched. And what we've been telling our members is look for a back test of that breakout level around 94.65. If that support level holds, we could possibly see one more push higher in the dollar. However, if that support fails, I think that would mark a trend reversal and we'd be looking for lower lows in the dollar. Regardless, over the longer term, we're bearish on the dollar, but over the short term, we're going to have to see how that 94.65 level holds.
Getting back to the Fed's decision we had yesterday, what was your perspective on how the stock market reacted? And as we possibly see these rate hikes next year, how do you see the stock market reacting?
I'm bearish on the stock market, but what's the saying? Markets can remain irrational longer than you can remain solvent. So could the stock market continue to go higher? Yeah, that's totally possible. However, I don't personally want exposure to general equities at these kind of valuations. But I think just like the metals, the worst case scenario was already priced in or close to. That's why we had a sell-off in the stock market beforehand, and then it rallied since.
Now, I know sometimes the metals do sell off into the end of the year, and then they rally at the beginning of the year, especially in the mining stocks with tax loss selling. Your perspective on what we might be able, what we should look for in the coming weeks?
Yes, seasonality isn't something I pay super close attention to because it's just not that reliable of an indicator. However, it's always something to be on guard around the Christmas holiday. It's very low trading volume. And, if you're a commercial banker and you want to see lower prices, that thin trading volume presents the opportunity to, take the price down a little bit. So I'm on guard, but it's not something that, there's other more reliable indicators, just purely looking at the price and volume on the chart.
And if people are interested in learning more about your work and all the technical analysis that you do for people, did you want to share with the viewers where they can find you?
Yeah, I would love to. So I'm the technical analyst, and then we have David Brady, who's the guy who kind of puts all the pieces together. I mean, he's he's better than anyone I know at just connecting all the dots and short to medium term forecasts and longer term forecasts. And then we have Jeff Clark as a contributor, who's our mining stock analyst. So I'm really happy with the team we have. We put out a free report every Sunday. You can get that at silverchartistliberty.com, and that's a link unique to your listeners. And we do have a premium service, but it's a very low ticket. Our goal is to serve as many people as we possibly can. And there's the option to do that as well. But I would encourage everyone to check out that free letter at silverchartistliberty.com.
Definitely. And obviously, everyone who's going to be using that link, Silver Chartist Liberty, is supporting our channel as well. We really appreciate all the viewers who have done that already. And so, Steve, thank you so much for your time. Any last thoughts before I let you go?
I would expect more volatility. Just because things look good here doesn't mean we can't pull back and retest the lows. But I think it's important that the recent lows hold. As long as that happens, I think we're looking good early into 2022. And by the way, I appreciate your transparency too, and mentioning that you're affiliated. So not everyone does that. So I appreciate that.
We're affiliated for a reason, right? So thank you so much for your time, and God bless.
Thanks a lot.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.